Tina Brown here with the Brown team at Sage Door Realty, and I am chatting today about home equity line of credit. What in the world is that? We often hear it referred to as a HELOC, H-E-L-O-C, which is short for home equity line of credit. Home equity line of credit. It's a line of credit you're pulling out against your home's equity. So super easy if you can just break down what it's saying. That really just defines it really easily in a nutshell. So it is often a revolving line of credit. So let's say you have a home worth $300,000. You owe $150,000. Therefore, you have $150,000 in equity. You can borrow against that equity. Doesn't matter what you paid for the house. What matters is what is it worth now. So you may have paid $175,000 for that house 10 years ago, and now it's worth $300,000. So a lender will have it appraised. They will go based on the appraised value and then take out what you owe. Again, that's your equity. That's what they're basing it off of. So you can borrow that amount of money in the form of a line of credit. So you can get approved to have those funds ready for emergencies or if there's things that come up. So often what I see home equity lines used for are things like if you have huge medical bills, medical expenses, things that come up. If you want to go to college and get a degree, that's a good way to pay for it. Home improvements, that's what a lot of people use it for. I feel like the majority of people borrow against the equity to improve the home because it's only going to make the home worth more. So, of course, you can invest in another property. So you can use it as a down payment for either a vacation home, investment property, etc. So you can use that for a down payment for another property, which we have done. So I think that's a great idea. And what they do for a home equity line of credit is your home is used as collateral. So in the lender's minds, that makes it a less risky loan because you're typically going to be required to have at least 15 to 20% equity. So if you have that, you're not upside down. It makes the lender feel more secure. So it is a great option to just open a line of credit and have it as an emergency what if kind of situation. So some of the many benefits why I see people use them is, of course, it offers flexibility. You don't have to go when you're desperate and try to get money. It's often hard to borrow money when you need money. So it's better to have the availability to money when you don't need it. So it gives you that flexibility to have funds just sitting there ready and able to use. And you only owe payments on the amount of money you borrow. So if you open a line of credit for $150,000 and you make a $20,000 bathroom remodel and you borrow $20,000 to do that, you're only making payments on that $20,000, right? So you're only making payments on what you borrow. It is just money sitting there waiting to use for just in case, what if, etc. And then, of course, it is categorized as a second mortgage. That means you're using your home as collateral, like I mentioned. So it is a lien on your home. It will have to be paid off when you sell your home. That's why you've got to have equity there. So when you sell it, there will be enough funds to pay back your first mortgage and this home equity line of credit. And often they have better interest rates than if you go and you're like, hey, I need to just borrow, $20,000 to remodel my bathroom. The rate you'll get with a home equity line of credit is often better than just going and getting a line from your bank. And again, that's because your home is collateral. It's safer to them. So the safer investments are cheaper. It costs you less to borrow funds when they consider it a safer investment. So there's some great options there. But again, you just have to remember if you don't pay it, it can lead to foreclosure of your property. So make sure you use it wisely. I don't recommend people get it to go and just blow money. It needs to be really to improve your home because the equity is just going to be greater when you make improvements. Or again, I know life happens. Sometimes it's a great emergency fund, but also if you're trying to better your situation, make more money, education, and then of course investment in properties. So those are my favorite uses of it, but really you can do a lot of different things with those funds. I have people reach out often too, and they're wondering if they have enough equity to do a home equity line. I can run comps for you for free and tell you, hey, this is how much your home is worth, and then you'll know what you owe on it, and you can decide if you want to use that equity. So I've helped people do that. So if you have questions, need help in that area, of course, let me know. I'm happy to help in any way that I can. So I hope it helps. If you need money, maybe consider a home equity line of credit. Have a great day.